and welcome to the Morningstar series, Ask the Expert. I'm Emma Wall and I'm joined today by Randall Goldsmith, fund analyst for Morningstar. Hi, Randall.
Hi, Emma.
So we're here today to talk about a fund, the JP Morgan Global Income Fund. There are 4 versions of this fund. We don't rate the Hong Kong version, but we do rate the other 3. We've just initiated coverage. A bronze, Morningstar analysts have awarded it, for the CCAV. That's the euro-denominated.
Correct.
And you've updated the note on the UK version, reaffirming the bronze status.
Indeed, yes. That's the OIC, which is called the Multi-Asset Income Fund.
And why have we awarded this fund a bronze rating?
Well, basically, each of the funds is managed off one underlying strategy. They've been running this for many years. It goes all the way back to 2007. That was when the US Income Builder Fund was launched. We originally rated that fund from our US office, and then we've looked at the portfolios. They're very close to each other in terms of overlap. There's just 1 or 2 tweaks to make them more relevant to the local market, so it made sense that we gave ratings to the OIC and the CCAV versions as well.
And it makes most sense if you buy the fund which is denominated in the same currency as your own, so you're getting that income, that all elusive, all important income paid in the currency with which you run your life.
Exactly, yes. I mean, UK investors want their income paid in sterling because that's where they spend their money in.
And just to have a little look at the fund itself, you've mentioned that it is highly rated by both our US team and now our UK team. It's a very competitive space, global income, especially since interest rates have been so very low over the last 5-6 years in both Europe, the UK and the US. What has this fund got that perhaps other global income funds don't?
Well, it's basically got experienced managers. They've been doing it a long time. It's had the same manager leading the strategy all the way from launch back in April 2007. As you say, there's a big interest in the marketplace at the moment in income, partly as a result of the Chancellor's change, so that people don't have to buy an annuity anymore and can do what they like with their pension fund. So they've looked for other ways of securing an income, and one idea would be to look at UK equity income funds, but then multi-asset income funds can give you the same thing but with less volatility, and there's not that many multi-asset income funds around. This one is probably one of the more established ones, as I say, with an experienced management team.
And there's been quite a few launches in this sector recently to fill that post-retirement investing gap. For those people who perhaps don't have a very large pension pot and don't want to spend £1,000 approaching an advisor to get that asset allocation, they can just do a one-stop shop in this multi-asset income space.
That's it. I mean, effectively, you're outsourcing your investment and securing that income to the investment manager.
And presumably this doesn't mean that it's a faultless fund. I mean, what are the risks associated with this sector and with this fund?
Well, I mean, the risks associated with the sector is that the income is not guaranteed. I mean, they're investing in securities which can go up and they can go down. If you take this particular fund, one thing to note is that it has had a bias towards high-yielding sub-investment grade securities, which do carry significant risk. I mean, high-yielding securities can be almost as risky as equities. Maybe even if you take account of the liquidity of trading in high yield sub-investment grade, maybe just as risky as equities.
But we should note that it is a very experienced investment team and it does hold a bronze rating by Morningstar fund analysts.
That's it. They know what they're doing, and high yield is just one of many types of securities in the portfolio.
Randall, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.